All right, inflation in Nigeria climbing in June year on year, 22.79% from 22.4 in May. This is year on year. Food inflation 25.25 from 24.82 in May. Core inflation rising to 20.27% from 20.06. Urban inflation seeing the highest as far as the inflation figures are concerned, 24.33% from 23.7. Rural inflation 21.37. Now here's month on month. 2.13%. We saw an increase across the board, but here's what's interesting. Core inflation 1.74%. It decelerated from 1.8. Urban inflation, rural inflation, both rising. Chapel Hill Denham putting out a note not too long ago, looking at the inflation figures. They had a forecast of 23.16. The survey of Bloomberg, the survey of Economists from Bloomberg, that was at 23%. So the headline inflation for June coming in under those forecasts, which was pretty interesting. Food inflation, the same beat. Well, for as far as Chapel Hill, they were forecasting 25.3, so that came in under there as well, was 25.25. And for core, this is where we actually do need to spend a little bit of time and talk about core inflation. The core inflation, 20.27. Chapel Hill, their forecast was 20.83. So we're going to be discussing this at length with our guests joining us from Abuja. We have, of course, Paul Alaje, who is the chief economist at SPM Professionals, and also Professor Uche Uwaleke, who is a professor of finance and capital markets and head of Securities and Investment Management Department at the Nasarawa State University. Both of you are very welcome. Good afternoon to you, gentlemen. So, this is creating a lot of reaction, so I do want to get your thoughts. Paul Alaje, let me start with you. What's your reaction to these latest inflation figures?
Well, the latest inflation figures reveal that food inflation is higher year on year to 25.25%, while when you compare that with what headline inflation is saying, haven't put food and core inflation, as you rightly mentioned, we have inflation grow to 22.79%. This is below most of the forecasts from local and international organizations. Many would think inflation will get to about 23% because of two policies that were introduced under President Bola Tinubu. The first will be subsidy that was removed towards the end of May. The expectation is that inflation will climb, coupled with another policy of unification of exchange. And properly speaking, or technically speaking, as economists, we say that Naira was devalued at official window. What we expect was inflation to follow suit. But what you should know, that it's possible that some of the commodities that were in this basket of commodity, in the basket of CPI for the National Bureau of Statistics, some of them might have old stock, some of them might still be dealing with old prices. It does not mean that when an economic policy is taken, the effect will be immediate. Sometimes it takes up to 6 months, sometimes it takes up to a full year before we measure the effect. So I'm not surprised that inflation figure, we do not see marginal increase. In fact, in core inflation, we saw marginal decline. But of course, the headline inflation and food inflation reveal the reality. When you look at food inflation increasing at over 11%, and you look at that of transport at 1.8%, you know that yes, inflation is increasing in Nigeria as at an increasing rate. But to put a summary to all of these, what we have seen here is that yes, inflation is increasing, and there is a future projection because of the slope of the increase in inflation. Even in the coming period, it is expected that inflation will still increase even further, but may also be at relatively marginal increase we see. But towards the year end, this is what is expected because of the behavior of the current curve of inflation.
Thank you, Paul Alaje. Professor Uwaleke, let me get your reaction as well. What do you make of these numbers?
Yeah, thanks, Rotus. To be frank, to be honest, I had expected a higher inflation number than just 2.79% from 2.4%, and that's on the back of these two, just as Paul mentioned, the unification of exchange rates and the sudden withdrawal of fuel subsidy. although I expect much of that to also manifest in the coming months. You notice the stock markets, for example, witnessed some bearish sentiments, last week, especially the last 3 trading days of last week, in anticipation of, in my view, a higher inflation figure. So inflation rates came in lower than expected, and then you also saw the reaction in the market. The market, shrugged off the figure that we had today, announced today, by experiencing a marginal gain. The market is closing in the positive today. As I said, it would appear it is shrugging off the inflation number. And let me also say this, that I think it's time the National Bureau of Statistics changed its methodology. I think there is a problem with the methodology because if you say inflation rate has increased by, say, 22.79% year on year, all you are saying is that between this time, for example, the previous year and today, the average commodity prices, have gone up by, that percentage. And I think that is, grossly understated. If you look at the methodology the MBS is adopting, MBS, tells us it pulls data from about 10,534 informants, across the country, and then it is using a basket of commodities comprising 740 commodities. But what's important is that the methodology they're applying to compute the change, CPI, of course, measures average change, between one period and the other. The methodology they're using is what is called the last payers method of, computing index. And that method is one method that is based on, base year quantities. And if you take into cognizance the fact that the MBS, the last time they did this National Living Survey was in 2003. They revised in 2009, and it's based on that 2009 data that they are still, computing the CPI, to the best of my knowledge. So I think it's time that methodologies are updated to reflect realities, because if you come to think of it, take a typical commodity, for example, that is frequently consumed. If it is it mudu of gari, for example, that, for example, moves from 400 naira to 600 naira, you wouldn't call that a 22% increase. So take any item, as an example, even though I know we are talking about, an average. So what it means is that it's time we, tweaked. It's time we took a second look at the quantities, we are assigning, at the weights we are assigning to the commodities that are being consumed. So the point I'm making is that, yes, inflation rate number, reportedly higher than previous month, but it is, in my view, largely understated.
Excellent. All right, we're going to take a quick break on the global business report. When we get back, we're going to get into those divisional items and look at the weightings and see how that can be rejigged. It's the global business report here on Arise News. Nigeria's inflation numbers. Do stay tuned. We'll be right back. Welcome back to the Global Business Report here on Arise News. Again, we are discussing Nigeria's latest inflation figures for June. There it is, 22.79% year on year from 22.4 in May. You can see food inflation, core, urban, rural, all rising. However, the story was different month on month across the board, except for core inflation decelerating. We have, of course, Paul Alaje, economist, and Professor Uche Uwaleke, who is a finance professor, also head of Securities department at Nasarawa University. So, gentlemen, thank you for sticking around with us. So you both gave us your reactions before we went to break. And now, right before we went to break, you talked about the basket and how maybe it can be rejigged. So let's take a look at that. At the divisional level, the consumer price index items, we took this straight from the Bureau of Statistics. So the both of you can see food and non-alcoholic beverages, as far as contribution, is 11.8%. And then you see a big drop. Housing, water, electricity, gas, other fuels, 3.8%. Clothing and footwear 1.7%. Transport 1.48%. I really want to get your thoughts there. Furnishing, household equipment and maintenance for Nigerians who have the money to buy new homes and replace their furniture, 1.15%. In fact, I think my House of Assembly might be part of that. With that 70 billion they said is to refurnish items. Education, 0.9%. And then health, miscellaneous goods and services, restaurants, hotels, alcoholic beverages, recreation culture, all at least from 0.68 to 0.15. So let's go back to the first table. Paul, Alaje, let me come back to you. What do we need to rejig here on the table in your estimate, as far as contribution is concerned?
Well, I think the number of things under food, non-alcoholic beverage that has been listed by the Bureau of Statistics. I think items that are contained in food needs to be remeasured and to be remeasured properly. What we have most of the time are the things that Bureau of Statistics have captured many years ago, getting to about 15 years now, that the Bureau of Statistics have not really adjusted some of the items in the basket of commodity. I'm of the opinion that the economy has since expanded compared to what it was in the early 2000s or before 2010. The reality of today shows that some of the things that we are consuming, we need to rejig them. I'm also speak to the issue of sample. We practice a sampling method. The sample size, I doubt if it's representative of the entire population. What is done most of the time, even though there are some international persons or economists that would say they prefer to use 1,000 sample size for an entire country. In the Bureau of Statistics, I doubt if this is up to maybe 0.01% of the entire population. So many people have also asked to say that we have never seen National Bureau of Statistics come to their estate, come to their homes, their office, their houses, to come and ask them what the reality is. Well, the answer to that is that Bureau of Statistics have people in a pool that they question from time to time and give them what they now publish on monthly basis. Whether that is sufficient is another kettle of fish. As we can see, it's not looking so. I spoke with you and your colleagues some times ago, and when I measure my personal inflation, what has happened to me, my personal economy, I can tell you the inflation for me has gone by over 40%. I don't know if it's the same for Prof, but for me, I can tell you, and I don't know if it's the same for you, Rotus in Lagos. What is your personal inflation? Because you see, we need to get to that point where we reduce error factor in our statistics. Because if you leave error factor large, then you'll be publishing figure that people will doubt the integrity of what you're publishing. So here is it. This is statistics and perhaps econometrics. Economists will tell you that the closer to population, the more accurate your result will be. But as the case may be, how do you explain to people, to Nigeria, that between May and June, there is a marginal increase of only month-on-month inflation, for instance, is 0.38%. How do you explain that to people when we know what the reality is on ground? So for me, I think Bureau of Statistics, we need to do more in terms of their sample size. I think it's abysmally small compared to what is obtainable, because if you ask even people working in National Bureau of Statistics, we don't need to go far. Measure your personal inflation, and you can put this on your social media and ask by what percentage as commodity or your consumption in the last 1 month, so that you can feel the reality and compare that with what Bureau of Statistics has measured. Yeah, I must say I agree that inflation is still going up. It's going up with figure review, but by what rate? I need to quickly compare something. The rate published by the Bureau of Statistics in 2018, what was published in 2018 and what is published in 2023, comparing June 2022 and June 2023, it shows that inflation has gone by, I think, over 4%. But when you compare the reality of what happened in June 2022 and June 2023, you see that the gap is not anywhere within 4%. So, Bureau of Statistics, we need to certainly do more. And regarding basket of commodity, there are some things we consume today that are not actually in the basket of commodity. And when people measure their personal, what is happening to them individually regarding what inflation has done to them, they will put those things, they will add those things in the factors that affect inflation for them. So I think broad statistics, we need to rejig, reconsider the basket. If the basket is too small, I'm speaking figuratively now, they may need to look for a bigger one so that more commodity can go inside, and we can start to see what the real factors are. And Nigerian citizens and Nigerian authorities, we finding unique solutions to bring down inflation. This might be the reason why NPR, most of the projection and policies NPR is making, so in the last 4 years, have really not been combating inflation effectively. We've increased NPR, we've increased CRR, we've also adjusted liquidity ratio up and down. The truth is that inflation that we have now seems to be very stubborn. It did not stop within the room. It's now climbing to the roof, and we don't know if he has something to elevate from the ground. God forbid. But if it gets to that point, the question is, what are we going to do? Which I think is a question that is on the table of every one of us right now.
Indeed, it is. So Paul Alaje says his personal inflation is 40%. Professor Uwaleke, what's your personal inflation? And what do you make of the table? And I really do want to get your thoughts on how it should be rejigged. What's your take? But give us your personal inflation.
Oh, yes. Personal inflation is a relative term. Paul is a big man. And so the commodities he consumes may be way out of what I do. But I think it's in that region, really. I just give an example. If a mudu of gari that is commonly consumed by everybody has gone up from 400 to 600, that's not 22%. Take egg, for example. An egg that used to sell for 15 naira is now 100 naira. Of course, that's 100%. Now, you can go on and on. I'm not even talking about the seasonal food items like yam. Yam, you might say it's seasonal. But the ones that are regularly consumed have gone up by, over, in many cases, in many instances, 40%. So what is clear? I think the consensus is that the methodology currently being adopted by the MBS for the purpose of computing CPI is outdated, and there is need to update that. You remember the case of even GDP. We didn't really realize that there were sectors that were really prominent in our GDP composition until we rebased in 2014. And that's when we discovered that sectors like communications, was very critical. And today, communication is contributing 15%, to GDP. So it's also important we update the methodology for CPI such that it can now truly reflect the movement in prices of commodities over time. Because don't forget, it is, a very major indicator. It is relied upon by, not only governments, investors, and so many stakeholders in decision making. And that is why, with respect to inflation figure in Nigeria, that data integrity, is crucial. Now, if you look at those 12 classifications by the MBS, those dimensions, of course, food, not surprisingly, was accounted for over 50%, of that 22.79%, over 11%. And that also tells you that the pressure is really on food. You also see that reflected in the food inflation. Food inflation is as high as 25.25%, whereas the core component is still hovering, around 20%. And if you also disaggregate that further, especially with respect to at state levels, we also find something very disturbing. For the first time, Lagos State, took the lead in terms of state with the highest inflation rate, and in terms of food, states like Kwara's food inflation rate is over 30%. Lagos food inflation rate is over 30%, when the average for the entire country is 25.25. In states like Borno, for example, you have food inflation as low as 21%. So that tells you something. If you have a very wide margin in terms of inflation rate across states, look at the margin, 21% in Borno, over 30% in places like Kwara and Lagos. That tells you that there is also a problem with distribution, and that is where transport, comes in. So you find that this sudden withdrawal of fuel subsidy has also reflected in cost of transport, further widening the inflation rates, across states. So, with respect to food, because it is major, because that is where the pressure is coming, okay, part of what we need to do to deal with it is to increase, of course, output. And one way by which you can increase output is to fix that sector, fix the agri sector, fix insecurity, such that, farmers can, go to farms. And I'm happy the president has declared a state of emergency on food, food security, because that is critical. Part of why we have high rate of poverty today, poverty is rising, is due to rising, price level, which of official numbers, tend to be understating. Then you take the case of electricity. Electricity is number 2 on that chart. Electricity, fuel, and gas. Those ones are also critical. You can't say you are fighting inflation when the cost of energy is is rising. When the cost of energy generally, okay, particularly power, is rising. There is also transport. So if you look at that chart, these 3, food, electricity, transport, constitute the bulk of it. Of course, you can also add clothing. Now, the effect of the forex, the high exchange rate on inflation, we can also see that in, even though much of it hasn't been reflected, especially in clothing. We saw that in clothing. You also tend to see that in the core areas, that is all items minus the seasonal food. Talking about furniture and household items, talking about recreation, okay? These are the areas you tend to see the high exchange rate, manifest. But as I said, we didn't, it would appear that the effect of that has yet to manifest in those areas. And I think, just as some people have argued, that may be because even before the unification of exchange rates, a lot of transactions, have been going on even at the parallel, market rate. So the impact of that may not be felt, immediately. But I expect to see that the effect of the sudden withdrawal of fuel subsidy, rub off negatively on food prices. The World Bank is estimating, I think, 25% inflation rate by year end. But I think with the way things are going, and with the way the palliative, except the palliatives again are channeled to non-cash items, we may also see inflation rate, rising even above 25% before the year runs out. So it's important that the palliatives are well spent. You mentioned the issue of 70 billion by the National Assembly. My advice here is that the 70 billion naira, which I've been told is now meant for repairs and now meant for furniture, those things can wait. Those things can wait. I'm not saying the National Assembly are not entitled to them, but as far as this moment is concerned, when we are going through critical period, I think the 70 billion can be applied in areas that are more productive, so that we can begin to see a more stable macroeconomic environment.
Excellent. We're going to take a quick break on the Global Business Report and continue this very important conversation with our guests. Of course, we're discussing inflation in Nigeria. Is it accurate? And what can we do to bring it down? That's what we're going to talk about after the break. Do stay tuned. Welcome back to the Global Business Report here on Arise News. We are still discussing Nigeria's latest inflation figures with Paul Alaje, who, of course, Chief Economist at SPM Professionals, and Professor Uche Uwaleke, who, of course, is the Finance Professor, Capital Markets, Head of Investment Management Unit at the Department, rather, at Nasarawa State University. Gentlemen, thank you so much for sticking with us to talk about this issue. Now, we're running out of time, and I just want to quickly touch on 2 more issues. 1, solutions, and then 2, what this means for the Monetary Policy Committee when they meet. So, Paul Alaje, let me come back to you. There were 3 shocks that were identified as putting pressure on food inflation, and you both have already touched on this. Those 3 shocks: transportation costs, insecurity in food-producing areas, and then legacy infrastructure issues. Do you both think that if we focus and really target those 3, inflation can come down as quickly as you guys can? Paul Alaje, let me start with you.
Well, Bloomberg was very correct. The organization is not the first to say this. The former central bank governor, talking of Godwin Emefiele, in one of the communique read after one of the MPC meetings, has also mentioned those three factors, even though in his report or in his communique, he emphasized two of them, which is insecurity and transport issues. But what should we be spending money that is removed on subsidy on? It should be on these three factors. In our opinion, the reason why food inflation remains the driver of the headline inflation in Nigeria today is because of supply side. Supply has drastically reduced. And what should we do? We have mentioned and advised government time and again that government should create farm hubs. And in fact, we can change the name to anything we like. As long as we are able to boost food supply. What do I mean by this? We need to organize Nigeria, and I mean the state or at local government level, into different settlements where we can have at least 20,000, 100,000, or 50,000 people on different plantations. And I'm very serious about it. Plantations. It's not going to be an advice that we should tell people to just start farming in front of their homes. No, it has to be plantation. And we have ready-made labor force. Already, government would say that we have over 250,000 core members per time. Can we start with these core members? Can we have people want to volunteer or young Nigerians? Remember that large administration spent billions of naira on youth. And I am yet to find one person who benefited from that program. But when government bring transparency to program like this, you can't say state government and local government, we contribute land, while federal government through central bank or any agency, whatsoever, would say youth should plant goods that we can process in Nigeria. That includes cocoa. We have an organization that is converted down already to chocolate in Nigeria. That includes rice paddy. That includes granite. A number of things. And we can look at legacy state like Kogi State, where you have cashew nuts. You have Ondo State, where you have cocoa. You have even in some state in the River Nile area where you have palm or palm kernel. You have in the north rice, in Kebbi, in Zamfara, in many states where you have all of these things happening at the same time. Can we put organization into all of this? Government must guarantee lives of these farmers. Today, most of the people, you can take a survey to people that are in IDP camps, their predominant occupation remains farming. And we must also be careful not to just look at agriculture is about farming. We also have people fishing. But the input factor that we feed our industry too, we cannot do so much. The issue of power comes in. And more importantly, there are a number of other things that could be mentioned, maybe because of time. But what should MPC be doing? MPC, for me, I think needs to, for the first time, find a convergence with fiscal authority, increasing NPR. We further, with the hope that inflation will come down. I doubt. I think we need to find other approach, other method. My opinion to them is they should sit on the fence. They should not increase any of the factors, but find alternative method to combating inflation, especially from supply side. We can use supply side strategy to bring down food inflation, among other things that is currently affecting, because when you keep increasing, it means someday bank will write most of their customers that monies they are owing in rates has not increased. The question is, how will they pay back? Will we have to deal with unemployment? Already projection for Nigeria is about 40%, even though the last figure reported by the Bureau of Statistics remained 33.3%. What do we do when your inflation goes to 40%? Not of the entire population of 250 million, of 220 million, I beg your pardon, of 70 million people, 150 million, no job to do. Then of the 70 million, you have about 28 million out of job. Add that to 150 million, 178 million people. And we wonder why we are having crisis in our hand. I hope that authorities will do the needful.
It's an in-depth topic. Professor Uwaleke, you get the last word, and we only got a couple of minutes before we go, so please go ahead. The shocks and what the MPC should do as quickly as you can, Professor Uwaleke.
Yes, I feel the MPC should halt the pace of monetary policy tightening and, where possible, deliberately pursue a low interest rate environment. I'm happy that the central bank, has reduced the cash reserve requirements for merchant banks from 32.5% to 10%. That's a step in the right direction. We expect to see more credit to the real sectors of the economy, even though some people have argued that may not be significant given the few number of merchant banks we have in the country. I think about 6 of them. So what is required is to do more, and doing more also means I've canvassed this in some quarters, that the central bank should also consider reducing cash reserve requirements for deposit money banks from 32.5 to, say, even the previous level. September last year, it was 27.5 before they jacked it up to 32.5 by 500 basis points. So the central bank should, of course, via the MPC, consider reducing the cash reserve requirements to the previous level, 27.5, or even to 25%. But anything they're doing, of course, has to be evidence-based, has to be a product of research. I also think the MPR at 18.5% is high. That's stifling access to credit. So the central bank should look at, as I said, adopting an accommodative monetary policy, given the fact that just as we have a X-rate here analyzed here, the major drivers of inflation in this country today are non-monetary. If they were monetary, then you could use the traditional monetary policy tools to tackle them. But because they are largely non-monetary, insecurity, transport costs, energy costs, these are exogenous factors outside the control of the central bank, and that's the more reason the central bank should, consider supporting, lower inflation rates by through an accommodative monetary policy. The fiscal side also,
and the monetary side.
The government
Thank you, Professor.
Has a lot of role to play.
Thank you. But we're gonna do a Guinness World Record and see if the three of us can talk for 2 days straight on Nigeria's economic issues, because you two are fantastic. Chief Economist at SPM Professionals, Paul Alaje, and Professor Uche Uwaleke, who of course is a professor of financial markets and capital markets over at the Nasarawa State University. Thank you both for talking to us in depth about Nigeria's latest inflation figures. That's going to do it for the Global Business Report. Do stay tuned to Arise News. From all of us, thanks for watching. Thanks for your company. I'm Rutu Sodiri. Do take care.